Hey, this is Phil and it's your Friday video update. So I thought I'd talk today a little bit about interest rates. I mean, everyone always wants to know where interest rates are going, and there's been some interesting things happening here recently that I think deserve some explanation. So as most of you remember, in December, the Fed raised their federal funds rate 0.25%, and that was the first increase in a long time. And the thought at the time was that we'd probably see at least another 4 rate hikes in 2016. Well, as it turns out, the commentary on that is changing quite a bit here recently. There's now talk of maybe not any more rate hikes at all in 2016, maybe one more at the end of the year, and some say that it may not be until sometime in the middle of 2017 or later. Why is that happening? Well, it's happening because of a lot of things that are going on around the world. First of all, we're not seeing much inflation here in the U.S. And second of all, monetary policy around the world is actually even easing even more. There are some that have their federal funds rate down near 0%, and there's some talk of Fed funds rate going negative. Now, you see, what that does when the Fed lowers their federal funds rate or goes into negative territory, that stimulates banks to lend because they're not getting any money by parking their money in the Federal Reserve. And so the Fed is kind of at a crossroads here right now. For the last 5 weeks, Freddie Mac's mortgage market survey has shown rates dropping. And so the market is in a kind of a wait-and-see attitude about what's the Fed going to do and where is monetary policy heading. So this is all very important information, and I draw a couple conclusions from this. First and foremost, the best thing to do for your clients and yourself is to make sure that you're linked up with a lender who's on top of this situation, understands what's happening, and pays attention to it to be able to advise you and your clients on what the right thing to do is. And the second thing I want to say is it should teach everyone that it's tough for anyone to predict monetary policy, so it's important to be on top of the day-to-day movement and the day-to-day discussion about what's happening with monetary policy to get a good understanding of what's happening in the here and now. And I'd like to submit that I pay attention to that on a regular basis and am here to advise you and your clients and share with you the information that I have at my fingertips so that they're informed, you're informed, and ready to make a decision that makes sense. I hope this helps. Thanks for listening. Please forward and share this with anyone that you think might find it helpful. And don't forget to call me if there's anybody that you're working with that needs my help to prepare to write an offer, get ready to purchase, and understand where their qualification numbers are. Thanks again. Take care. Have a great day, and I'll talk to you next week.